You are listening to ChartingWealth.com's Training and Trends for Wednesday, the 29th of July, 2015. The training will start off with what we learned from looking at the Qs today. What is the Qs? Well, of course, that's the NASDAQ 100. And folks, we have been waiting for this setup for a while. We watched the market drive up from the 13th of July all the way through, and we're looking at our two-day charts. These are our two-day candles, all the way through Tuesday the 21st. Then the market rolled over. Well, the market may very well be starting to roll back up again. So what are we looking for? This is what we've done. We've got down candles. We have drawn a two-day trend line connecting the last two-day candles, so the last 4 days that we've charted. We see derivative oscillators losing some speed. We can see that the MACD has been coming together. However, we've had a lot of down pressure on the market or on the Qs, the NASDAQ 100, but it's been pushed back up by the bears, pulled down by the bears, pushed up by the bulls. If we look at the 4-day chart, we can get a better feel for what might be happening. The 4-hour chart. It's been a long day. Here we go. Here's our two-day trend line. We see it above the current movement in the market. The Qs rolled over going down on the 4-hour half-day chart the afternoon of the 22nd of July and has continued to move down since then. However, it appears it might be starting to move back up. We can see that over the course of this day, and when I say this day, we're talking Tuesday the 28th of July, the market moved up. In fact, it closed up almost 1%, 0.86% today. So, 0.86%, 0.86%, not a full percent, but it was a decent movement up. We're looking to watch for the Qs to break through our two-day trend line. Even better if it breaks through the two-day trend line at the same time it crosses over going up on our MACD, which it may very well do in the next day or so. If we start seeing that occur, we want to seriously look at getting into an up move on the Qs. Why? Well, because the Qs is still technically in an up move. It never crossed over going down on the two-day MACD. And if it crosses over going back up again on the 4-hour, that will parallel the up move in the two-day chart. And that spells the kind of action we want to look to get into. Now again, how do you play this? Well, if you're still learning, of course, you need to be making this into a virtual trade. If you're a seasoned trader, you make up your own mind. We do not call stock trades here, but this is a great training opportunity for those of you who are learning how the market really works, and that's what we're all about here. So this is a potentially perfect kind of setup for seeing how to actually really trade these indexes. So let's watch and see if this develops. It could completely fall apart. News could come in from somewhere and kill it, but it hasn't happened yet. Okay, let's go back out to our two-day chart. We're going to quickly give you the trends. This is where we are. IYY is in a confirmed down trend. MACD crossed over going down. We can see that the 4-hour chart is actually moving up some. We may have reached a bottom on that. There is no cross going up. It's still in a confirmed down, but we're going to be looking potentially for a bottom here. So maybe there'll be an up trade in that. SPY looks about the same way on both the 4-hour chart and on the two-day chart, confirmed down move. However, look at this. It's not quite crossed over yet, so we do have down movement in the stock pressure, but look, it has stopped somewhere around 208.33, and it never crossed over officially on the MACD going down. So again, SPY could present a buying opportunity. If you draw a two-day trend line, see it breached by up movement on the 4-hour chart, and if the 4-hour chart actually crosses over going up, hasn't done that yet, but it might. Keep an eye on that. We've already covered for you the Qs and where that is, so we know what's going on there. Much closer than SPY is to actually crossing through the two-day trend line. Now, you can use that two-day trend line as your trigger, But of course, the safest is to see the MACD crossover going up. And if they cross over at the same time, even better, double confirmation. Okay, lastly, let's go back to the 2-day chart and take a look at gold. Look at gold. Gold settled out, we were talking over the last few days, around 104.43. It hasn't moved down below that. Now, if we go from the 2-day chart to the 4-hour chart, even more revealed, we can see that gold has been sliding sideways on the 4-hour chart pretty much since the 22nd Wednesday of last week, and is still within the range that it moved down on that day. Crossed over going up on the 27th. We're looking for it to cross over the 2-day trend line. If that happens again, might mean that you got an up move in gold. Problem is, it's been sliding sideways for so long, but gold has a mind of its own, and sometimes when it pops, it really pops. So keep an eye on gold very closely over the next few days. Well, folks, that is where we see the markets as the markets open, of course, on Wednesday the 29th. That is all of our training for today. Those are our charts for today. If you are interested in receiving our daily review and forecast, you need to email us at cw@chartingwealth.com. What we end up doing is we will consider people who do write to us. If you're a serious student and investor, we must personally hear from you, evaluate your request, and then we'll determine whether or not you are the person that we are interested in sharing our daily reviews and forecasts with. Again, that email address, cw@chartingwealth.com. Thanks so much for joining us. Wish you the best in trading from chartingwealth.com.